This idea of infinite banking, I keep hearing all over the place that it's the best thing to do. It's where all your money should go. And if you're not doing an infinite banking system, you're losing money. And I've had a lot of arguments with financial planners over the years, probably upwards, I'm close to 100. And it's not 100 millionaires. Most financial planners are not financially wealthy or independent. Most of them work, and actually, the average income of a financial planner is about $65,000 a year. So, we're talking to Hannah Kesler today, who thinks she's going to convince me that's a very good idea. Before we do, welcome back, Alchemist. This is the Alchemist Nation Podcast. Myself, Gualter Amarelo, Mitch Jaworski, and Michael Shine is away on a 2-day campaign to learn about a holistic woo-woo version of the stock market. So, Mitch, bring us in, brother. How do we want massive income, passive income. How do we get it?
Yes, exactly. Well, simple two-step process. You organize and then you collect.
I
Which
like this. The
apparently is
point is
what
not to work.
I think that's basically what Hannah does. She organizes and she collects. I think that's what IBC ends up being at the end of the day. I think I just solved this all in one sentence. We're
Well,
done.
IBC is also a medical condition, so we gotta clear some things up. What are we talking about when we say IBC, Hannah? And welcome to the show, by the way.
Ah, thank you. Thank you. No. So IBC is just an acronym for the infinite banking concept. And I mean, honestly, all of this stems from a black book called Becoming Your Own Banker by an author. His name is R. Nelson Nash. But the thing is that Nelson's not the one that invented this concept. I mean, this concept's been around for over 200 years, longer than our tax code's even been here, because tax code's only been here since 1913. And in my opinion, I think we were better off in our economy without it. There's actually a surplus in our nation, but we don't got to go there, right?
Oh, we can
But
go
but
there.
this is what the wealthy have been using for generations and just decades. I mean, this is literally where banks go Google something called BOLI. It stands for bank owned life insurance. You can look up the hundreds of pages that come up of just how much in banks own and whole life insurance. And it's like, okay, guys, are you doing this because you're stupid, or are you doing this because you know there's something to this that the rest of us, the masses, just don't know about? So that's really all it is, just copy and imitating what the elite and the wealthy are doing.
Yeah, it's interesting. There's a phrase, the masses are asses. So I do like to say if I'm on the side of the masses, I should probably look around and change where I'm at. I think that was Thomas Edison, or it was one of those presidents, maybe Thomas Jefferson, but he said, if you find yourself doing what everybody else is doing, like shift, pivot. And I teach a course called Be the Bank. So on Be the Bank, I'm always telling everybody, look, who has their walls lined with granite? It is the bank. The bank has like the nicest buildings and the tallest buildings in the city. These financial institutions have figured a few things out. You should do what they do. But also, I'm a real estate investor, and I know Mitch is as well. And neither of us have infinite banking policies. And so this has been brought to our attention for years and years and years. And Scrappy Gualter never had a reason to do it because Scrappy Gualter never had any money. But as that guy has died, and I now have a son, and I'm building wealth in a more protected manner, I see myself thinking, well, where can I protect my money? How do I hold things in a different manner? And so Gary Aker invited you to be on this call because he's like, I think that they're gonna fight. I think it's truly got to be a battle. And as I said before the call, I'm actually kind of sold. I just need to be sold all the way. And I'm a salesperson, so I'm saying like, sell me on this idea of infinite banking. Before we dive into it, you did mention the tax code, we should just get rid of all of it. And I got to be clear, I make a lot of money because of the tax code. So I'm okay with the current tax code, but I do agree that it hurts the little man who's not buying real estate, who's not building businesses, and the social engineering of the government is really, really favoring us who own assets. So
Okay.
Hannah, what do you say when somebody says infinite banking is a terrible idea? It doesn't make any sense.
Yeah.
What is your first thought there?
And before I answer that, I got to tell you, actually, in my family, we call it the limericks. Okay, so I remember this growing up. Dad would always say, "Hey guys, do not be a limerick. A limerick is a monkey. So when everybody's going in that direction, you pivot and turn and run in the total opposite direction." That's just what we called it within my family. But
I did see a picture of you and your dad on your Facebook recently. So dad's still alive, he's still out there rocking and rolling, and
man,
you're now taking the reins and doing all the speaking. So very cool.
I am. So it's definitely a family business. And that's what's so cool about it. I think is just because I have this different perspective of being second generation into all of this. I mean, because personally, I've never had to go to a bank to ask to borrow money. I always borrow from the family bank, and thus by doing so, we're keeping the money within the family. Now, I'll tell you though, this is a business, and dad says this all the time too. He says, honey, I love you, but if I'm going to issue you and I'm going to be your mortgage holder, I'm going to charge you a 14% interest rate because that's how the family bank interest rates are going right now. And that's the friends and family discount rate. And so he says, hey, I'm going to charge you this 14% interest rate, and you are expected to pay this. Obviously, I'm your banker. So, if something happens, you can't pay me on time this month, it's okay. We got a little bit more flexibility over here. But if you just straight up don't pay me, I'm going to come and foreclose on you just like any regular bank would. And just because of those habits and discipline was instilled and ingrained in me at such a young age, it's just carried me through all this life journey that I've been on in my youthful years of 26 years old. But hey, I'll tell you, doing all of that and learning how money actually works, it made me a millionaire by the time I was 24. So we're just rocking and rolling and keep going with it. But
Heck
Walter, you asked
yeah,
me a
cat
question.
approved.
Cat approved, I
I,
know.
I gotta I gotta go back before I answer the question. It's so here's a statement you made that I absolutely adore. You said that your father, because he loves you, charges you 14% interest. The first time I heard this was Michael Shine, who is our co-host on this podcast normally. He said to me years ago, his first loan to me, and he said, Gualter, I'm going to charge you 12% and 2 points because we're friends. He said, that's my friend's discount. And today, he actually recently on a loan that he did charged me 4 points and 15% interest because we're friends.
Yes.
He bailed me out of a problem, got me into an opportunity, and I paid that loan gladly. What's cool about it is my brother had a loan with me, a $100,000 loan a few years ago on one of his buildings. It was 15% interest because he called me. He was like, "Hey man, do you know anybody who could lend $100,000 on a property I'm buying? I'm willing to pay 15%." I said, "You're willing to pay 15%?" Yeah, I know somebody. I got you. So
Yeah.
family can do business together.
And it's the golden rule. The one who has the gold makes the rules. If you don't like my pricing, go elsewhere, but I'm in control of it.
I love that. So you got into what do you borrow money from your dad for? So you're borrowing your family money, right? I assume this is an infinite banking policy. Your
Yeah.
dad's actually you're borrowing against the family bank, paying yourself interest, but you're borrowing money for something. I'm
Yes.
hoping the answer is something I like a lot. What are you borrowing money for that you can actually afford to pay 14% interest on?
No, absolutely. So it was the first ever one that I borrowed money for was my house in Florida. I grew up in Kansas City, but I moved to Florida when I was 19. So that was back in 2018.
Mitch, now you know what the accent is. It's Kansas City. Got it.
It's not a Kansas City accent. I will keep debating this, but I'm too distracted by listen, there's a cat on
I know.
and I'm the cat in the community. Everyone knows me as the cat. And I'm like, see, look, they gravitate. The cats just know I'm here.
Hey, we get along so well then because I'm the crazy cat lady. I literally have a
Perfect. I'm like
trophy.
the cat whisperer. So that I love, he's just like, he or she is just chilling. Like, that's
Yeah.
awesome. Like,
Miss
I'm going to be
Daisy.
part of this podcast. Just deal with it. And
Yeah.
that's cat energy right there.
But I definitely it's for the house, my first ever, it was a duplex
Where did you buy?
in Florida, Daytona Beach.
Okay.
And that's when I leveraged the money with dad. Dad pulled it from his policy. He was charging me the interest. I was paying him my monthly payments. Now I was the deed holder, but he was my mortgage holder. And then I would pay him my monthly mortgage payments. And
And
then
dad took a mortgage. He took a legitimate first position mortgage on the property.
yes, so he filed
Okay.
that with Volusia County here in Daytona, right? Because the thing is, again, honey, I love you, but this is business. If
Yep.
you do not pay me, I will come and foreclose on you. We're going to make sure this is recorded, right? So, and
Oh, I love
honestly,
dad already. This is awesome. Go
And
on.
that's how it should be, though. Friends, family. I
That's the
mean,
way it should be. Protect
you
yourself so
private, well,
so
you
you
have
can still
private
enjoy
lenders.
dinner.
Yeah, we have
yes.
private lenders that are friends, and it's like, yeah, there's a mortgage recorded at like you can look it up on the state website. Hey, look, there you are, buddy.
Yes, exactly. Well, and we also in this household we watch a lot of Judge Marilyn, the People's Court, and that's what Judge
People's
Marilyn
court.
always talks about. She says, "Hey, this is when you actually do want things in writing, is when it is with your friends and family, because you don't want to disturb that relationship." Where a lot of people, the masses who are, as Gualter says, the asses most of the time, they're the ones who are not doing it because they're like, I don't want to diminish this relationship. It's going to be too weird. Come on, y'all. Just it's business, right? We got our business hat on versus our personal hat on. There's a time and place for everything.
Follow the rules, otherwise it does become weird, right? Just do it the right way. I mean, I would do this for a stranger. Why wouldn't I do it for my own family? So you bought the house that you're in, and I got to tell you, I know a little bit about Daytona because some of our community is out there, and Daytona's market's doing well. A lot of Florida is down, but Daytona Beach specifically is actually coming up right now. So you purchased at 14% interest. Are you still in a 14% interest? And by the way, great job on a duplex. I tell everybody your first property should be a duplex, not a single family. Don't do that first. Do that later. So how did you decide on a duplex? Like, at how old were you? You were 20 years old when you started this?
I was 19. Well, I was 18 when I started my first policy, 19 when I bought that first house. However, I just recently sold that house actually to my father because the thing is that was my first ever house. Now, y'all are going to tell me I'm stupid for this, but I put a lot of renovations into it and it was my baby. And I'm like, you know what? I have too much of an emotional attachment to this house. I cannot be the one who's renting this out right now. And dad, you need the depreciation right now. So how about you buy the house, you rent it out? I'm going to take this money. And then I moved with the dollars. But then also, I'm more into private lending. That's just what I'm into. I don't really want the tenants and doing property management and all that stuff. Even if I have to hire a property management company, I just didn't want to do it. Not right now in my life. So sold the house to dad. And then actually in November of 23 is when I moved over here to Beachside. And then that's when I bought this condo. But the same thing happened. I paid my down payment on the property and all of the closing costs and blah blah blah. But then the rest of it, because I mean this condo cost me almost $1 million. The rest of it I financed with dad, the bank of dad. And to answer your question, I was literally just with dad last week at Lake of the Ozarks. If y'all don't know where Lake of the Ozarks is at, y'all got to look it up. It's right in between Kansas City and St. Louis. So we go out there during the summer months, and September is like the best time to hang around. All the kids are back at school. It's very quiet on the lake. But I went to dad and I was like, Dad, I'm about to come in and buy your business. I'm paying this 14% mortgage, and I just bought this new van that I'm financing as well within the family bank. My expenses are kind of getting up there, especially with the sale of the business. Dad, instead of me going to a conventional bank, would you finance this with me? So instead of paying 14%, I'm now paying 11%.
Playing the game. This is negotiations 101. So that's a powerful move, right? So you're buying a business. Now, buying a business, I assume there's some seller financing because this is a business that your father also owns.
Yes.
Now, prior to the purchase, you're working in the company.
Yes.
What drew you to working in the company, the family company? Because I know there's a lot of people who are listening who are a lot like me. I actually, most of the people listening are older than me. Their kids are older than me. Some of their kids are my age. And they're thinking, how did I miss the opportunity to get my son or daughter into my business? What is it that one drew you to the infant banking concept? And we are going to get to why you like to help people because I know inevitably that's what you're going to say is that there's a lot of fun in it. You like figuring these things out. But why did you stay in the family business? I mean, you grew up with it. Why stick with it? All these other kids grow up around real estate. So, oh, I don't never want to do that. And
Yeah.
then two, you get so many points for being in the lending side of things. I too am on the lending side of things, and if I own both sides. I have 600 units multifamily, and I have $1 million lent out, and I like that $1 million lent out way more than I love the multifamily because of the net worth, but I've got to say operationally, it takes a lot more work than the loans.
Yeah.
So start with the first one. How did you get into the family? How does somebody trick their kids into doing the family business?
Well, and you know what it was is that I really didn't have a passion on the forefront of all of this. Really, when I was in Kansas City, So first of all, I got to share this. My dad was a chiropractor back in the day, and that's what he was doing in the Kansas City area. And that was my first ever job when I was 14. I got fired from that job. All of my siblings, I got an older brother and a younger brother. We've all gotten fired from the family business before. And I was in tears. I remember that day getting fired. So I went online that night and I was applying to all these different places. And that's when an ad for Cracker Barrel popped up. So I applied and I started waitressing like that next week. Went in, did all my interviews and all that stuff. And I'm telling you, I think that's really where I found my entrepreneurial spirit at, because back then, I don't know if it's still the same right now, but back then there was no tip sharing. So whatever I made within that shift, that was all my money. And I could determine how much I wanted to make with how well I took care of the guests or how quickly I flipped the tables. And one thing that's really cool too is they actually pay you out in cash every single night. So being a young teenager, that was kind of fun, right? But
This
that's
is the sort of job that we always say, don't let your young daughter go and work as a bartender or a waitress because they're not going to understand money anymore. I think
yes.
it's this easy.
No, and that's so true, because in Kansas City, I remember when I moved to my second place and I was paying rent with some of my girlfriends, I was struggling for some months because you see that cash that comes in and all you want to do is you just want to spend it as it goes out. Now keep all of it within a shoebox. Yeah, don't do that either. But I was doing that and it really clicked with me that I was like, okay, obviously I'm not going to be a career waitress all my life. I don't want to do that. And my passion really is wanting to get into fashion design, have my own boutique, have my own clothing line. I would love that at some point in my life. And I actually had a 529 plan back then that my grandfather was putting money into, and it would fund for the local college, the Johnson County Community College that was just right there in Kansas City, but it wouldn't fund for this out of state tuition that I was looking at. I was looking to go to Savannah College of Art and Design. And I was like, okay, if I'm going to go to this school and get this degree and all this education, I'm going to have to go and get myself a boatload of student loans. And then I'm going to go to this 4-year university. And then once I leave, I'm going to find myself a 45, 50-year job. I mean, I'm kind of working backwards if I do that. And so I kind of took this big epiphany to dad, and dad was like, well, my business is going great. I need help within my business. And if you don't want to help me, I'll go find someone else to help me. And I was like, well, okay, well, what do you want me to do? And so essentially it was more so I just
So you weren't thinking
fell
like, oh
into
my
it.
God, last time we went down this rabbit hole, I got fired.
Yeah.
Something changed. You were okay with getting back in business with dad. How is it he can fire you and you're still like, I want a second chance?
Oh,
What made you say you could do this?
I'll be honest with you, and now this might sound a little dark, but mom, dad, and I, we didn't talk for about a year and a half after I got fired. I'll be honest, it was a little sticky there for a little
I
bit.
believe it.
Yeah.
I fired my mom once, so I know what that's kind of like. So
So,
you got over it though. You got
yeah.
over it, that time went past and dad brought this to you. Were you resistant a little bit? Like, okay, I don't know if I want to get into this business.
I didn't take it seriously at first. I really developed and grew into it as time went on. But because I think maybe I was so young, I was still trying to figure out what I wanted to do with my life, that I just really didn't take it seriously. I've always had a good work ethic and drive, but I didn't know if this is really what I wanted to do. However, once I really started to be more open with it, be more present with it, and sit in on deeper, longer conversations with mom and pops and sit in on those executive meetings, that's when my mindset really started to shift. Because then it's like, what really I love the most about it is that yes, I help people, but it's also my own team members. My team is really relying on me because I'm the one that supplies them the income for their families, right? And that's really what matters a lot to me is that I can also impact, yes, my clients and other people, but definitely my team members.
That works. I get it. I have over 30 people on my staff, and that motivates me. And then we have the 600 families that live in our buildings, and that motivates me. And like on days I don't want to do it, I'm like, well, there's a lot of people who really need me to show up and go do that thing. So, uh, the accountability, it's almost like you got sneaked into the business.
Yeah.
You were in between jobs. It was a good time to jump in. And now, as you're going through and you're learning this business and you're doing a lot of speaking, what are some of the problems you see in the marketplace? Why is IBC becoming more and more important for people to pay attention to?
Yeah, well, definitely because of COVID times. I can see, because I'll tell you, actually, during the COVID time, I thought our business was going to drop drastically because how we would go out there and get our message is going to live events. And obviously, when the world shut down, there was no more live events going on. So all of us just pivoted to online. But what was really fascinating is I think a lot of people saw what the government is willing to do to their people, that they're like, oh my goodness, I'm in more control than I ever thought I ever was. I don't want to go and do that. This is really what I want to do. And so they started to look even at their money and where they're keeping it held at inside of conventional banks and involving themselves with the Federal Reserve System, which is not even federal nor any reserves in there. But again, a conversation for
It's
another
not a
time.
Ponzi scheme. It's not a
We can
Ponzi
bring that
scheme.
up. We can bring that up at the summit. That's quite all right. That won't be live. There'll only be 100 millionaires in the room, and we absolutely love that type of conversation.
Yes,
Oh
yep.
Yes,
yeah.
not a Ponzi scheme.
I've
No.
spoke about the Fed Reserve and all that and coming off the gold standard, but I digress.
Yep. Well, and actually, what opened my eyes to all of it is when somebody recommended that book, The Creature of Jekyll Island, and that just
Oh, great book.
totally changed my perspective. But I think it
Big
just
book. So if you are reading that book, like get into it with caution. It is a big book, but it's a
yes.
good book.
Yep. I did a whole podcast series on it. That's why I made myself get through it. And I was like, you know what? I'm going to take each section and just do a podcast episode. Yes, for my people, my listeners, but really selfishly for myself.
That's why we have most of our guests on. It really is so that we can learn more for ourselves and ask our own personal questions on how do we level this thing up. So getting back on track, Hannah, what is something that you think in the marketplace is uh, a tool that people can use now, right? You and I just talked about lending earlier. People getting into lending, a lot of them will come to me either through equity trust, through a self-directed IRA, or they'll come through their infinite banking system. And either one of those, they're looking for a return, but they, like you said, they don't want it in the banks, right? The banks are paying 3.5% right now, and they can get a little bit more when it's inside of an IBC system. I know you can't quote rates, but maybe you can. I actually don't know what you're
Yeah.
legally allowed to do or not.
Well, no. And actually, to answer that question, though, I think what gives it such a bad rep is that there's these big gurus that are out there, the Dave Ramseys, the Susie Ormans of the world. I mean, my dad used to record Susie Orman every Thursday night on the television. All right. So we were deep in that
I
world.
used to watch her too. And
Yeah.
Dave Ramsey. I used to think that was the way to wealth. I'm
Yes.
obsessed with getting gazelle intense. I was like, gazelles are an intense animal. Run! But you can't get rich that way. So,
No.
so what
But
happened?
but it's good discipline. See, that's the thing. And actually, Walter, you're kind of seeing the shift just in your own mindset too. Well, hey, back then I didn't really see the benefits of this policy, but now because I'm in this different stage of life, I can see why people are doing this now. And so I think it's good voices for the masses, the people who need the discipline. It's almost like saying, hey, should you ever own or use a credit card? I mean, someone who's not disciplined with credit cards, no. But if you're disciplined with it, it can be a great tool, be a great asset for you. It's the same thing within the infinite banking space because the only person who can screw up the policy is you in how you use the policy. And who do you know better than you? Seriously. Seriously. So get back and actually, Walter, to answer your question about rates. Yeah, there's a contractual guaranteed interest inside of that policy contract. And depending on the insurance company, I just sum it up and I say it's 3.5% is that guaranteed interest that the company has to pay you. I won't even talk about the dividends, but yeah, there's dividends we get in those policies. But you know what? My policy, I get tax-free growth. The money inside of my bank account where I'm personally getting less than 1%, I get taxed on the pennies that I earn over there, you know? And that's just
It is
one
frustrating.
aspect.
We don't like paying taxes. That is one of those things that comes up quite a bit. The rich aren't a huge fan of taxes. Mitch, I can ask her the next question, but I feel like you've got some queued up.
Now I'm curious what your next question was.
Well, I was going to ask her what's the worst thing she's ever seen done in a
I
policy.
mean, I
So,
guess that is not the shift I thought you were going for, but yeah, because I'm like, I feel like the questions I have are not what he was leading into. But no, I'm actually curious about that because, you know, you kind of talked about a basic framework, and actually, that is probably maybe a question that can like precede this question because, I think a lot of our audience has roughly heard of this concept, but still doesn't really know what it is. So, like, what's like your kind of elevator pitch on like, all right, here's what a policy looks like, here's what you would do to get one started, and like, this is how it looks. Like, what's kind of like the bullet point?
No,
before you answer that, Hannah, like everybody who's listening at home, just think about this. You've all sat down with a financial planner who pulled out a pen and a piece of paper inside your house. They started drawing circles and squares and connecting the dots and put dollar signs over here and saying this is what the bank does and this is why. And halfway through the paper, you were absolutely confused and it didn't make any kind of sense. And some of you bought policies, some of you regretted it, some of you were put into trash policies, some of you, a very few of you got put into good policies. And so we're trying to solve that.
yeah.
So go ahead, Mitch. So
Well, so here I'm gonna lead Hannah, and then she can take the ball and run with it. So, um, my introduction to it and how I understood a way to go about it, at least from people in my network, was that all right, we're going to essentially do an overfunded policy where like over the course of 5 years, you're plowing in a good chunk of money that first 5 years to get that policy funded to a nice size, and then that's kind of your base. That's your like, to quote a movie, your fortress of solitude, like your FU money. You know what I mean? Like it's like so. Anyway, I'm not gonna get into that whole quote, but classic from John Goodman. But anyway, so um, I love the idea, and at the same time, I also was very clear on, all right, I need to be able to put X amount of money in every year. Otherwise, I'd lose impact, have some issues, whatever it is. And granted, it's not the end of the world if you didn't do it, but it didn't have the same effect. So me, I took that pretty serious and then kind of future casted. I'm like, all right, well, am I going to be able to put that amount of money in every time for 5 years? And the answer really was always kind of no. But I think people get to a point where the answer becomes yes, and you want to start creating more protection. And I'll give you an example. Like pre-show, we talked a little bit, and I said like how I kind of am building my own Bitcoin treasury. And it's like, well, am I losing out on tax advantages? Am I losing out on tax-free growth? Yes, but at the same time, kind of no, because if I only ever just borrow against my Bitcoin, which is the long-term plan, then in theory, it's almost like real estate when you're just borrowing against your property. And but yeah, at any point, if I want to sell,
it
taxes and
bottlenecks you if you want to
it
sell.
bottlenecks, and then also on top, yeah, and on top of that, I'm not like granted, Bitcoin's a vehicle that can go up in price, and I can gain from that, but I don't have any guaranteed interest I'm earning every year. So like there are so like as much as like that is like my low budget version, so to speak, of being my own bank. It's missing some of these other pillars, right? So I guess with that rant said, kind of tie off the missing items and also like kind of the benefits.
Yeah, yeah, because I could go a lot of different directions, but I think y'all will appreciate this. How I think about the policies, actually, and before I even get into that, all this is talking about is where are you storing your money at? Because at the end of the day, you got to store your money somewhere, whether it is in Bitcoin, underneath your mattress, in a hole in the backyard, down at the bank, and the bankers are using your money, or with your
Buried in
finance.
property.
Bingo. And so
You didn't say buried under property, you said buried in property.
in
Buried in
property,
assets. Yeah.
yes.
They
And-
hold on to it quite well. They're just like, no, not today. You don't get this back yet.
Yes. But you know, you gotta store your money somewhere. And there's a whole bunch of different reasons of why I feel safer keeping my wealth with the insurance company rather than the commercial bank or these other avenues. Because personally, I'm not a markets girl, you know, I want to control the risk of what I take with my money. That is why I'm a huge advocate of real estate and specifically lending on real estate, because I know at the end of the day, I hold that first position on that piece of property and I know I'm going to get my return on investment even if you don't pay me, right? So
I'll get it back.
that's just where my mindset is at. But I think y'all will appreciate this. If you use the analogy that starting a policy is almost like starting a business from scratch. And here's kind of what I mean. Let's say that I put $10,000 into this new business or this policy, and year one, I get profits back of 70 cents or 70%. Okay, I get it, right? I just started this new business. There's going to be overhead costs, marketing expenses, blah, 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 right? But year two, I put 10,000 into this business or the policy, and now my growth profits are 85 cents or 85%. All right, I'm in year two. I know I'm not breaking even yet, but I'm trending in that correct direction. Year three, when I put $1 into my business, my break even point is by that third year. My cash is growing by the same money that I put into it. But now here's where the fun starts happening. Year four, I put $1 into this business or the policy. Well, now my growth is $1.10 now. So if you almost think about the policy as the whole idea is get to that third and fourth year, and then every single year after that, I'm going to have profits greater and greater than the year prior. It's kind of the question of, well, how many of these businesses do you want in your lifetime? And that's guaranteed to perform that way. That's just not my flapping gum saying that. That's inside of the policy contract itself. So hopefully that analogy is helpful, but that's literally why I personally, I got 8 policies. I'm 26 years old, and people are like, why do you have 8 of these stupid life insurance policies? Well, if you get it, you can see why I'm doing this, because I want that uninterrupted compounding and that guaranteed growth year after year.
So I think we got the answer to the question of what's the biggest mistake someone can make. And it sounds like not getting to year four, because if you do year one, two, and three, you're basically like just, hey, I'm going to just take a loss because I'm not getting to the positive side.
Yep.
So I'm sure there's others, but it sounds like that's the most basic. And you mentioned people, you need to have that longer term vision with these
It
things. And
is.
that made it actually as clear, as simple and clear as it's clicked in my head yet. It's like, oh, okay, like, yeah, you have to get past year three and really into four and five to make this thing make sense. And
Yeah, and
Hmm.
after that, you benefit.
I did a math analysis. I went back and forth with, okay, let's say a real estate investor who's scrappy like Walter, just rolling capital constantly, and then you've got this infinite banking system who is still investing the same way Gualter does. So operating operationally like a strong operator, just now in the beginning, one side has all their capital deployed immediately, and the other side is handicapped by, let's call it, a 10% fee upfront in year one.
Yeah.
And in the beginning, because of the way I moved capital so quickly, it looked like this side was running very well. And it ran ahead for years and years. But eventually, year five, it starts evening out. And in year five, you start seeing this side start coming up. And the only way this side could maintain is doing bigger and bigger acquisitions, which theoretically it also could, because there was a little bit more capital there and it could theoretically do those if the refis were happening in time. So
Yeah.
I looked at it, I said, okay, that's my argument. My argument has always been velocity of capital with a specific set of skills. But Hannah, over the years, I've realized my set of skills are extremely rare. Very few people will ever get to 50 units, let alone 600 units. And we're probably going to be at 1,500 units by the end of the next year. So I think about it and it's like, wow, what do the masses, or let's call it the subset of the masses that we serve, that 8% that are aiming to be above where everybody else is financially, in the infinite banking system actually starts playing really well because they're not doing as many transactions as we do. They're not buying as big as we buy. They're not buying
So,
as good as we buy. Go ahead, Mitch.
Walter, what you're saying is you have a special set of skills?
Yeah, yeah, I'm pretty
I'm just
damn good.
totally quoting Taken right now. It's like as soon as you said that, I'm like, wait, when did he become
I have to go
anyway,
now watch Taken. So I don't Netflix as much as Mitch Jaworski does.
it's
It's
like
not
Liam
easy
Neeson. I have a special
being
set of skills. They set you
so
up for this. No.
I gotta bring it back to there is a question I have. The worst thing that I've seen with these policies is about 80, I think the number is like 89% of them never ever pay out because usually the person misses their payment. They miss a payment, the policy gets canceled, and I think it's only 2% of all, I'll mess this up. One of them is whole life, the other one's term. Whatever the bad one is pays out like 2%, and the other one pays out like 20%. So either way, they're typically people just don't get to the end because they miss a payment, the policy lapses.
Yeah.
What that to me, that's my thought is the worst thing that somebody could do with one of these policies. But what is worse than that? Or is that the worst thing?
No, no, and I got a few, because, and actually, Walter, I want to make this comment too, because I literally just did a whole podcast episode on, yeah, I get that question a lot, specifically when I'm talking at a lot of real estate events. Well, Hannah, why would I put my money in this policy, only have access to 70% of it, and then go do this lending deal? What if I just take all of my capital and go invest it directly? Wouldn't I be ahead? And how I sum it up, it's the tortoise and the hare story. You're going to be the hare. You're going to beat me in the early years, but there comes a point where I'm the tortoise. I catch up and I win that race all day long. And so, Mitch, you're kind of right. It's a long-term mindset of all of this.
Yeah.
So,
And it's also more passive. So you end up like that's the other thing is the operator on this side did have to be more aggressive, like did have to continue taking on more units. Whereas on this side, you're actually making room for a passive entity, a passive lending business that this side didn't really have access to, which was very intriguing to me. So go on.
yes. But now to answer your question though about, where can people kind of screw up? And I love this conversation because I've noticed this. There are people who are deep into infinite banking. They will sit in on all the webinars, all of the live events, read Nelson's book from front to cover every single day. But then they start their policy and then it's like they don't do any more education for themselves. They just click with this arrival syndrome, is what I call it. And they think, okay, I know everything there is to know about this and I can't learn anything else. So I'm just going to continue on. And those are the people that stop understanding, well, why am I paying this large of a premium? Premium is just a payment. I'm just throwing this money away. And it's like, no, because you have to rethink your thinking. That's one of the 5 laws when you're doing this. Number 5 is retrain and rethink your thinking. Your premiums are your deposits. When you collect in that mindset that any premium deposit that I put inside of this policy, why do I call it a deposit? Because if I put money into an account that I own, I control, and have immediate access to the capital, that's a deposit in my world and not so much a payment. And I always ask my clients, have you ever made too many deposits inside of your bank account? I hope the answer is no. But it is, you have
My
to,
banks never complain about my deposits, that's for sure.
right? And so you just got to keep retraining that thinking because people will fall back into that old pattern and old habits and that old mentality that they've been programmed up to this point in their life. So, and I know this is very easy because I've been around this since I was 8 years old. So I just grew up with this, but I get it because a lot of my people who start seeing this information when they're 50, 60 years old, they got to go through 60 years of retraining their mindset, how they've been taught about money up to this point in their life.
And it's hard because what do they get in the mail? They get a bill. It looks like a bill.
Yeah.
Does look like a bill.
It's
Looks
a
like a
reverse
bill.
deposit slip is the way to look at
Sounds like
that.
a
It's
bill. Smells like a bill. Walks like a
right,
bill.
but it is your
Acts like
money.
a
So
bill.
how can people protect themselves? So I have a theory, and I didn't really dig too deep into this, but I have a theory that a person gets this policy. They're rocking and rolling with it. They get to a certain point in age, their health starts declining. Somebody forgets to make a payment, right? Dementia, call it what it is. Somebody stops making a payment. Money's basically gone because now the policy is null and void. How do people protect themselves from that happening?
Yes. And so this is really where here at the Money Multiplier, we have our implementation team. And I tell all my clients this, love me or hate me, but we're going to be lifelong friends from here on out because you're going to hear from me every single quarter for the life of your policy. But that's what I would do because honestly, your agent or whoever sold you the policy on that case, they get copied in on all communication that the insurance company sends you in the mail. Trust me, our mailbox gets hefty. I have one specific person in my office, and that's all she does is collect the mail, scans it in, sends it to the right person, right? So if something like that happens, I can tell you from us over here, I'm calling you, I'm calling your family, I'm checking in, making sure, hey, what's going on? Because there's solutions. You can always go inside of your policy. Actually, Mitch, number one, you can always decrease your premiums. When you made that comment of, okay, I don't know if I can pay these premiums for the next 5 years, that's okay because you can always go in there and reduce it down by 70%. But even if I can't reduce it down by 70%, I just don't even have that 30% to make into the policy, you can go in there, one, use the cash values to help pay for premium if you really wanted to, or two, change it to what's called the reduce paid up. And so all that means, because I know that's insurance lingo, but all that means is that your premiums stop. You still got your cash value bucket, you still earn the interest, still earn the dividends, and now you just got the death benefit that's there. It just means that there's no more further out of pocket capitalization that could be happening within that policy. So there's always solutions, but just to go back, I think that's the number one thing too, is that people are scared to ask for help. They feel embarrassed when they're like, I don't know what to do. I don't have the money, so I'm just gonna deny the phone calls, and I'm not just gonna ignore this whole situation, right?
And then what about somebody does pass away? Are these able to be transferred to other people? Is there some sort of beneficiary that you can put in place? Because I'm always looking at succession, right? What happens to me? And then obviously the people I'm working with, all they're thinking about is, hey, look, I don't want to be owning a property that's difficult for my family to take over. Like my family wants something to do with this business. So what is our succession plan? How do we get out of this? And one of the things we've talked about is, you get in a trust, and yeah, the trust operates on the behalf of the family. So let's say they're lending, that money keeps going back to them. It's due to the trust. If something happens, your family's on that. Is there something similar to that in the IBC world?
Yep, yeah. There's also a book, and I have this. I wrote a foreword in this book called "What Would the Rockefellers Do?" And so, if you want to go chat GBT or whatever into it, go look up what's called the Rockefellers waterfall method. You can get deep into it. But yeah, because at the end of the day, it is still life insurance. There's this permanent death benefit until your age 121 that's in force on your body. And so at the time of your passing, that death benefit's going to get paid out to whoever you listed as the beneficiary. And if it's a trust, that's why I love trust. My trust, I have a say from the grave, even though I'm not here anymore, because I'm not married. I don't have children. And let's say my brothers have a gambling addiction. I don't want to leave them with over $1 million of tax-free money and then they go to the casinos with it, right? So that's why I
It
personally
could literally kill them. It could be detrimental to their lives, right?
right.
So it is possible leveraging a trust, some very similar tools to something that these guys already have and are operating with. Uh, Mitch, I'm getting towards the end here. I've got to meet you in person at the summit, Hannah. I'm very looking forward to it. I assume you're going to talk a lot about the technique around how we get implementation via real estate vehicles. Obviously, your experience with real estate investors at the summit. You're going to be speaking on stage, but will you also be available for like side conversations? Will you be there with us the whole weekend, or will you have at least some of your staff there?
Actually, it's funny because it was Gary that said, "Hey, you got to come here," and especially since it's in my backyard, because I'm over here in Daytona Beach. I know it's being held in Orlando, but here's the thing. I said, "Well, Gary, I can do it, but on Saturday I have a group of orthopedic surgeons up in Indianapolis who I'm scheduled to go speak to as well. So I can come in on Thursday, Friday. I'll be there all day, but Saturday I got to go and peace out and go speak to them up there. So I'm gonna be around. I'm gonna be engaged, be there in the audience, and those are my favorite kind of conversations anyways, is just those one-on-one connections.
So perfect. Well, that sense of urgency, be there Thursday, be there early, and Thursday and Friday. if you want to get access to Hannah Kesler. Very cool. So, Mitch, before I ask my final question, what's one you got for her?
She kind of already answered it, but maybe we'll go with one that is potentially not insurance related, and that would be a book that you've read that you recommend to others or that changed, your perspective or the way you go about investing or even the way you go about life.
Yeah.
Because I feel like you probably have one, if not many.
And no, and I do. I have many. I mean, obviously, the biggest one is becoming your own banker. But really, the one that stood out still to this day, because I'm reading the one right now, Surrounded by Idiots. Have y'all heard about that one?
I don't know that one,
No,
but
but I love the
that,
title.
I was
Yeah.
gonna say that sounds like a title me and Gualter would write. I love
Yeah.
that.
No, no, straight up. I found it when I was in the airport coming back home from London. I was like, okay, this looks kind of cool. But I'm reading that one right now. But through all the books, Who Not How. I mean, I just
Great book.
that completely changed my perspective. I'm a freaking control freak. I am a perfectionist. I'm a recovering people pleaser. So it's just all of that. It's just like it doesn't have to be me to do this stuff. Who is my who and who can get it done for me?
That's awesome. And I appreciate that. I say a reformed people pleaser, and I am almost envious of you because you did it much earlier in life. I reformed probably like 2 or 3 years ago. So kudos for getting it done in your 20s because people
I'm still working
pleasing,
on it. I
yeah.
like to think I'm a recovering people pleaser, but I absolutely still people please. I just made sure that they pay me more. So I just please the people who pay the most.
Well, and that's the thing. It's like you still do it, but you just get better at kind of saying no and setting boundaries, which, is a journey. So, and I think the quote, and I'll say it because I'm sure someone listening is going to appreciate it. And what got my mindset to change was I heard a woman on a podcast say, if you're a people pleaser, show me a list of the people that are pleased with you.
Wow.
Ooh,
And
that's
I
some
was just
deep
like,
stuff.
they're like that list doesn't exist. And if it does, it's one or two people, and then they drop off. And even if you're married, like your husband or wife, they'll be pleased with you, and then the next day they're like, you mother effer. Like so, it's a futile effort trying to
They'll
please
fire
everybody.
you. Apparently, it's how it works.
Your dad will fire you.
And
So
then
who not how?
on the good days, you double their salary. So what we say is, Mom, you've been good today. So 0 times 2 is still 0, baby.
So we still love you, but bottom line figures. So Dan Martell, not sorry, Dan Martell, Dan Sullivan and Benjamin Hardy wrote the book Who Not How. It's a phenomenal read. When people are trying to do financial planning for themselves, there is a group of people that you can go to. Everybody, I don't think one person, one size fits all. I think you need a series of advisors, people who are specialists. You need the attorneys, you need the SDI area folks, you need your custodians, you need your series of attorneys. We've got our infinite banking folks, our realtors, our mortgage broker, all these different types of advisors that are part of the full equation. If you had to divest your portfolio of real estate, you'd be talking to lenders, you'd be talking to brokers, you'd be talking to uh, contracts, all sorts of different people that you bring in. So our goal at the summit is to make sure it's the right people. Hannah, as we're going towards the summit, there's a lot of people out there who maybe have a chance. They have kids, right? They've got children that are your age,
Yeah.
younger, sometimes older. If you go back to 20-year-old Hannah, I know you said you're 26, so this is like 6 years ago, so not too far in the distant past. But if you could go back to your 20-year-old self and give yourself three pieces of advice that would get you to where you are today, healthier, happier, wealthier, and just do it faster, what three pieces of advice would you give to somebody who's 20 just getting started, or to give to their 20-year-old children who are just getting started?
Yeah, I would say, and actually, I've been thinking about this one a lot just here recently too, because it's been so hectic, so crazy. But one, give yourself some grace. Seriously, give yourself some grace. I mean, people are going to mess up. You're going to have that humility, right? And it's okay. We're all human. We're all still evolving. Nobody's perfect. So, especially just within my generation, too, of the Gen Z generation, we need to give ourselves some grace and not be so just connected with this idea of something, right? Just be real with one another. My second one, I would say seriously for my business owners, young entrepreneurs too, give yourself some sabbaticals. Just take a Sabbath, even if it's just for one day. Seriously, close down your laptop, shut your phone off. It doesn't need to be a 24/7 grind. And I think just here in America, we kind of have that toxic work mentality here. That's just my humble opinion. And you will burn yourself out. And I'm telling you, if you burn yourself out over and over and over again, it just keeps getting harder and harder to pick it back up after that burnout session. So that's been a common theme as I evolved as a leader and a essentially a business owner, getting to the point where I'm buying out my father's business now, is, those things that you, as new owners of businesses, you think you got to be on this grind all the time, but when you are burnt out, you cannot show up for that other person too. So that's just been a very big theme within my life. And then I need one more, right? Three?
One more.
No
One more. I'll give you
pressure.
just a second to think about that third one because I gotta go to the grinder one. I am so toxic grinder. I am,
Dude.
and my buddies are too. Like the guys who work for me are toxic grinders themselves, and we're just like we're on calls all the time. Like, you know what the problem with this country? They're not working hard enough. Nobody's putting enough hours in. If if you really put enough hours in like us, nobody puts in hours like us because we're owners, operators. And we pound chest with each other, like, yeah, dude, I'm at my birthday party right now and I'm working. And it's like, hell yeah, let's go, grind away. But no, there's probably a point where we do need to take a little bit of time off. Although I absolutely love the grind. I'm so like
Me too,
thankful and
man.
blessed for the work. But
I know.
yes.
Well, that's because
So
you
if you
love what
had a
you do
third
too,
one,
which is important.
Well,
if you
well,
had a
and
third
then
one,
Walter, sometimes doesn't it get to a point where you're trying to be on vacation with your family, you turn it off and you're like, well, what do I do now? Oh,
what
my
do I
whole
do?
identity is just my business. What do I do? Those, I'm like, whoa, shooken up. Okay, girl, you got more personality outside of your business, okay?
Yes, yes. I was on a cruise with Mitch and some of our high net worth friends who were just like enjoying a celebration of a wedding. And I was there with my son and my wife, and it was so hard to disconnect because I was like, well, we're doing a $9 million loan right now. It's the biggest loan of my career, and I don't really want to disconnect. Like I'm having fun here, but I'm also having fun there.
Yes.
And then God made me sick, and me and my son were both sick together. We took a lot of naps together, and it was like the greatest time of my life. Was like sleeping in bed with him, both of us sick, and just be like, nah, I don't want to get up either. So, if you could come up with a third one, you've given us grace, you've given us take some time off, entrepreneurs.
Yep.
What would be the third piece of advice for somebody?
Honestly, and I know this one's kind of just generic as well, but seriously, it's powerful. You just gotta show up. You just show up. I mean that's 50% of the battle there is just showing up. I know that when you're trying to get out on the road, or let's say there's this event coming up, and you're like, oh, do I really want to go to that? Seriously, how many times have you shown up to somewhere and you're like, I am so happy I did that. I know I didn't want to before I did, but now I just feel better. I feel grounded. It's even like sometimes this is something I need to do more of because, yes, a grinder over here, hanging out with my girlfriends. Sometimes I'm like, I don't want to leave the house. I don't want to go and see anybody or talk to anybody. But then once I leave hanging out with my girlfriends, I'm like, why did I not want to do that? That was so much fun. So you just got to show
100%.
up and get out of your own damn way and
Oh
have
my
fun with
goodness.
it.
Wow,
Yes.
that one hits. That one hits.
I live
Yeah.
that.
I hate getting on planes. I will say this. I hate traveling. I hate going, like leaving, going to the speaking event. I just going and walking my properties. I can't stand the trips. And yeah, every time I get there, I'm like, dude, I'm really glad I showed up to this property today. Like this was like the team's excited to see me. I'm excited to see them. I'm seeing tenants. I'm catching things that nobody else was catching. So I'm really proud that I showed up and did it. Or I speak to it, I'm at an event and people are like really thankful I showed up and I'm having that one-on-one and it's like, okay, I showed up for that person. That was totally worth it. But last night I went to a concert, a Marilyn Manson concert that I wanted to go see for years and years, and I just happened to see him on Facebook, and I was like, I'm gonna work my ass off, I'm gonna go, and then it came down to it, and my wife was like, hey, you're going to Marilyn Manson's concert, and I was like, nah, I'm just not gonna make it. Like, I'm gonna work on this funnel, I'm gonna stay working here, and she said, no, you already paid for the ticket. I was
You're
like, what do
good.
you mean? She's like, yeah, no, I took your card and I paid for the ticket, so you got to go. And I got so much done in a half hour and I got off and it was a great. I'm so glad. I told her when I came back, I said, man, I'm sitting here. I texted her, I was sitting here at this concert, listening to this guy talk about, this idea of helping other people through his music, and I was like, dude, like this is why I'm still in this business. Like I'm glad I came tonight. It just reminded me why I do what I do, even though I'm at probably the craziest person's concert in the world. It it was just getting out and doing something, and leaving my family at the house, like just kind of separating for a little bit. So Hannah, thank you. That was really good advice. If somebody wanted to get in touch with you before the summit, if somebody wanted to schedule time to meet with you at the summit, or I just want to learn more about Hannah Kesler, start following you, what is the easiest way to get in touch with you?
Yeah, no, I would say honestly, if you go to my website, hannahkesler.com, Hannah spelled the same ways forwards and backwards, Kessler with one S. So that's where I'm at. You can see me on there. And then, just getting into this whole world of infinite banking and being your own banker, themoneymultiplier.com. And just check it out.
I like that. Hannah spelled the same both ways. You just blew my mind. That is
Those are my
that got
bar
me.
tricks. They're called polydrones. You ready for this? I have a few of them. So, words that are spelled the same ways forwards and backwards are called polydrones. So, a lot of people know race car, right? Race car spelled forwards and backwards, same way. But also taco cat. Taco cat is spelled the same ways forwards and backwards. You're welcome, everybody.
I'm seeing that one.
Oh, oh, I'm having too much fun with this. Do you have one more?
Oh, actually, I thought I did have one more, but I can't think of it right now.
These are
But wait, there's
polydrones.
more.
I've never heard of these before. Ladies and gentlemen, this is Hannah Kesler. You'll see her at the summit. The summit's coming up. It's the 23rd to 26th of October. This is probably your last chance to see me live in person in Florida, except I will be flying down there sometime this month at the end, like I was just complaining about. I will be flying down to Brandon. I'll speak down there. I'll be flying out to Plymouth, Massachusetts to speak over there. But this return on equity equation I'm talking about is not what we're going to be delivering at the summit. The summit we're going all the way in tax strategies, helping people get to the next level, untapping equity that's been sitting there, finding money that you already had that you didn't know you had access to, increasing your return on equity, and then just hanging out with some really cool people. Ron's van will be down in Orlando. So Ron will be driving down. Hannah, will you be coming across with the van? Will the van be outside parked? My buddy has a ambulance that he converted. Actually, somebody else converted it. He bought it because, who not how. And so if your van shows up and his van shows up, there may be a little thing outside where it's like, okay, check out these
I'm
these
going to the
pimped out
van party.
vehicles.
I'll see you guys outside.
No, straight up. We've done it before, actually, at some of my events, my masterminds that we've hosted. We did our little pre-party. I put the van out there. I mean, people love that stuff. Now, an ambulance is cool. At some point, I would love to do like a schoolie conversion, but mine's just built on the ProMaster chassis, and it's beautiful. But I don't think so because I'm going to be right there in Orlando, and I'm going to bounce out from Orlando to Indy.
Right.
But
That's
at
right. Are
some
you taking a
point, I'm
flight to go to
down.
Indy? Are you doing a flight out?
Yeah, yep.
Yeah, it's really. I'm just trying to figure out how the heck you get to Indy in a day. You use a plane. That makes sense.
She's
I
already
too
right at the
travel
Orlando
via
airport.
planes. Awesome. Well, Hannah, I can't wait to meet you in person. It is true. Up to this meeting, Gary told me, he's like, dude, like, I think you're gonna like Hannah way more than you think. And he's like, I know your feelings about IBC, but I think by the time you're done with the call, you're gonna like the IBC platform. And so everybody knows, like, it was 15 minutes before we got on here, and I was already thinking, okay, maybe it's time to do an infinite banking policy at this point in my career. And I just asked Hannah, I was like, just sell me. Just, you got to convince me. Just sell me, make sure that it makes sense to me. Ladies and gentlemen, we want massive income from passive income. Normally, Mike would say that, but Mike, Mitch, take us out here, brother. How do
Hey,
we get it?
you gotta organize and collect because the point is not to work, it's to generate income.
Cheers to your success. We have a choice. Always work with the
Those are the
best. We'll see
best.
you online. See you at the summit.
Bye, y'all.
Plenty of room at the top. I'll see you at the summit. That's true. Later, guys.